Hello, I hope you are doing well. We're gonna talk about Beyond Meat, and lately the stock has been going down. You will see here in the stock chart that it used to be at around 150, 57 over here, and right now it's actually down about 50%, as you can also see over here in the 1 year performance. The very interesting thing about this stock, and this is why I'm making this video, is that right now this stock is trending a little bit, generally speaking, or like on Reddit, on a lot of different social networks. It's being discussed, and as if that's not the only important thing, there is also a massive short interest here. Take a look at this one; it's at 32%, almost. Generally speaking, anything above 10 is considered a high short interest and has been going on for a while. People have believed that the stock will go down, and it did go down indeed. But the thing is, at some point, when the stock is it has lost a lot of its value, there is potential for a short squeeze. And especially in this kind of stock where the outstanding shares is 63 million, is a very small float. So this means that the stock moves quickly, and it can move quickly up and down. So it's important to at least have that in mind, because it can signal a potential massive short squeeze here. And I like these levels over here because this reaches the lows of March 2020 at about 50, 51 over here. So it may still go down a little bit, I wouldn't be surprised. However, there is an interesting potential for purchasing that and maybe reap the benefits of a potential short squeeze. But let's take a look at the financials, see if it actually makes any sense to buy Beyond Meat. And before we move to that, you will see here in the news tab that there are news from Yahoo, for instance, that Beyond Meat is getting sorted harder than any US company. And this kind of news potentially signal that there is a lot of belief that the stock is going to go down in value. And that can be concerning for the short sellers and good for potential buyers of the stock. And you see here more articles. Short sellers are targeting Beyond Meat. So all these things can amount to an avalanche. And let's take a look at what's going on with the financials again of Beyond Meat. Let's take a look at the income statement first. And frankly, I don't really believe that this will happen very soon, if it happens, a short squeeze. But again, it could set up itself for a few weeks later or so. I wouldn't be surprised. Now, the year-over-year growth of the company has been increasing, but stalling in the last couple of years here. Stalling a lot based on what it has been doing in the previous years, where this kind of growth actually vouched for such an increase in the stock price. That would have made sense, and it did make some sense. But here you will see that the growth seems to be stalling massively and actually going in the negative here. Not great to see. But let's take a look over here at the net income of the company, which seems to be losing money. So the company is actually losing money, and that's not encouraging. And it's probably one of the reasons why the company currently has lost 50% of its value. That would make some sense. And there has been a time where Beyond Meat was super popular in the US. I still remember it when I was living there, because I've lived in the US for many years. And it used to be an alternative to all the burger chains, I guess, creating this kind of meat that's not really meat, and people that are looking into health substitutes, healthier substitutes, if that is a healthier substitute. It is marketed as such, but I don't know if it really is. But regardless of that, it was a big thing, and now it seems to be losing some steam. The total assets of the company are growing here, but we need to know why they're growing and what makes them grow, because it doesn't look like it's from operations, because the company seems to be losing money. And the total equity over here, actually the total equity is going down. I'm looking at that over here. So it actually decreased over here. That's not great to see. Cash flow statement here. Yeah, the cash from operations, as expected, will be in the negative over here. And practically zero investing, just a little bit, I guess, in capital expenditures. So company tries to invest in itself. That's good, generally speaking. but I don't know what kind of extra income that would make for the company. That's the important thing. And the issuance of stock, not yeah, there was a little bit over here in 2019, but overall there is some debt over here, yeah, as you would also expect, because I was expecting to see some debt at some point. So the company is not really issuing more shares, it's basically adding more debt to it. At least they are not diluting shareholders, but still they are adding debt, and the free cash flow is growing in the negative. So it makes a lot of sense that the company is going down in value from what it was in the previous years. That definitely makes some sense, especially given the fact that their growth seems to be stagnating tremendously. And so let's take a look at solvency here. And yeah, you will notice that the total debt to equity skyrocketed because of that latest loan, and that makes some sense. Bringing, yeah, actually massively depleting the Altman Z score here also makes sense. So yeah, the company is getting debt, and it doesn't seem to be making enough to sustain the payments at some point, for now at least. So this is why it definitely makes sense that the company's value, the stock, is going down and the market cap is decreasing over here. It's still at 4.5 billion. Now that said, I wouldn't myself buy this company for a long-term investment. I couldn't do it right now. This valuation is insane when you actually compare it to the cash flow that the company is actually losing, plus the limited growth potential that seems to be happening over here. I wouldn't do it for for a long-term play. However, it's a very interesting trading play, a very interesting potential trade, just because again of the potential short squeeze that we examined over here. And again, remember the shares outstanding are very low in number. So this means that the actual float, which is the available stock that can be traded in the markets, it's not held by institute or locked, and can be traded. It's probably around that level, maybe a little bit less. Maybe it's like 60 million or so. It's still very low. Like even if the total shares outstanding were the float, that's very low. It's a very low number. So you can have explosive movements up and down, and this has been happening already in the company with the stock, and it makes a lot of sense just because of that. So yeah, this kind of insane short interest here, everybody's shorting the everybody's shorting the stock, could lead to a potential squeeze. Yeah, it's I think we are gonna be seeing a lot more discussions about it, and take a look and watch for Wall Street bets on Reddit or something like that to see what people are thinking about there. Because frankly, I could definitely see a lot of people just buying this to make this kind of GameStop like play. GameStop, where it actually had a massive short squeeze like a year ago. So this could end up happening here. So take a look at it and have it in your watch list. It may come to be an interesting play for a trade, but I would really recommend that you don't intend to keep this for a very long time. I wouldn't do that myself. All right, hope you enjoyed the video. If you did, please like it and subscribe. And in the meantime, you can watch this video in case you missed it about Zynga and how it got acquired by Take-Two Interactive. Thank you for watching, and I'll see you in the next video. Bye bye.